since you're based in Singapore and you deal with the entire Asian investment universe. China plus one is what India is touted as. And over the last 2 or 3 months, I am also seeing a lot of reports where people, companies and big ones at that, are voting with their feet when it comes to moving money away from China and bringing it into India, whether it is in the form of FDI and FII. Is this a trend which is here to stay? Since you do a lot of macro as well, how would you see a global allocator of funds on the FII side and a company which wants to use India as a sourcing base over the next 10 years?
Actually, if you want to reduce it to one line, this is the story. The one line story is China plus one. You can look at it both from the FII, that is the portfolio investor, and also the guys who want to set up supply chain, their operations, production, etc. in India. So the first one, which is the FII part, is easier to understand, that it is happening because the investors are frustrated with their returns from China. So in the last 25 years, the returns from China would be less than 2% per annum. And this is when you say that their GDP went up whatever 9-10% per annum. So it has truly disappointed investors because of various policy actions where the returns were made and then lost over the last 4 or 5 years. And now people are so sick of it that in newspapers like Financial Times, every third, fourth day, there's an article on how investors want to cancel China and how investors are looking for China-free benchmarks. So these things are very big now, in the sense that even people are willing to name themselves as that we are not investing in China. It is not being said by people who refuse to give their name, kind of stories. On the other hand, in terms of the FDI, that people have realized after COVID and maybe around other issues that it is too risky to put all your eggs in one basket. That if there is some zero COVID policy or some technical issue, or US, which now considers China as a threat, might sanction or might blacklist or do whatever. And also from our side, that is India's side, that we are offering a big market, but also on the other hand, saying that if you don't make in India, your either your license requirements are tougher, or that you'll have to pay duties, or you will not get that 10, 15, 20%. I mean, you'll basically have this make in India duties kind of thing. That it is also logical for many of them to make in India, maybe to meet the government's demands first, but over time become comfortable with the Indian system and production and labor, and therefore make out of their own evolution. So overall, both the groups are interested in India, and you can see that in FII flows, and you can see that in announcements from Apple and others, and everybody wanting to build sort of at least the new growth, maybe a little bit more via India production rather than China production.
If you like the video, do like, comment, share and subscribe.